Hello everyone, welcome to the channel. I think it's a good day for an update on some of the charts that I shared with you before. My name is André Cardoso, thank you for being here. It's always a pleasure to share my work with you. I hope you enjoy it. So let's delve into the Dixie, the captain of the ship. Let's start with the dollar index. We are now approaching, we are trading the default target for a 3 drives pattern formation, as I called your attention last week. But most important at this point, because this already belongs to the past, we are approaching 104.90. We are approaching the golden Fibonacci extension level. That completes the bullish scrap pattern. We should pay attention for a potential bounce. That bounce should trigger a move towards the 38% Fibonacci retracement level. Let's see if the Dixie will correspond to this expectation. We have also the fiber finally breaking above this major resistance level, primarily forged at 107.46. Then we have an intraday resistance at 107.76, and finally today we are breaking higher above these previous highs. At this point, I'm calling your attention to a specific Fibonacci level that comes at 224% Fibonacci extension level. I'm ignoring the golden Fibonacci because it looks like the fiber is trying to move higher. 108.47, and of course without ignoring the eventual 78.6% Fibonacci retracement level, just a few points above 108.62. So we have already a range here to consider for the fiber. Previous resistance from this descending channel, also approaching from above, so we should pay attention to this, let's call it a cluster between a retracement level, an extension level, and the channel structure resistance. That being said, pay attention to this price zone also for the fiber. The cable, I also called your attention to this possibility last week. A break above the resistance may favor moves to the upside. We have major resistance at 128.61. I will not be surprised to see the cable starting to unfold into a cup and handle pattern formation. This is a continuation, a trend continuation event, and we will pay attention to this move. At this point, we favor, at least based on the breakout of this resistance, we should expect moves to the upside on the cable, at least a retest of these previous structure highs. On the other side, we have Australian dollar already breaking above the resistance. We were tracking the possibility of an head and shoulders pattern formation that requires a violation of the support, which never happens. So basically the Aussie actually forms a new fractal support at 66.33, and today's session crucial moves above the major resistance placed at 67.04. So I admit more upside momentum also for the Australian dollar. The Kiwi, and some of these patterns that I projected before did not materialize this time. Sometimes it happens. The Aussie, the cable, the Kiwi, the fiber, all of them I was projecting patterns a few points below the support levels, but there are always something else. And if you pay attention to this, the Kiwi chart on a lower time frame, if you prefer, you will see this divergent structure forming a 3 drives pattern formation. So basically inverted with the Dixie, we have also the New Zealand, the Kiwi on a lower degree, obviously, with forming a 3 drives pattern to the upside. And of course we saw this move today towards this previous resistance. At this point, we may also start to consider the extension of the last swing low, or both the extensions, because I admit we are already approaching the golden Fibonacci, or very close to the golden Fibonacci extension level. Let me clear this text option. Golden Fibonacci very close to the daily fractal resistance at 61.40, just a few points above, and then we have the 224% Fibonacci extension level at 61.83. Of course, the first level to consider, the Golden Fibonacci extension level. We are talking about a potential extension reversal Fibonacci level that comes at 61.44. Then we have the dollar versus the Canadian dollar. I have here just a note to this previous fractal support. This is the weekly fractal support level 35.85. We have a golden Fibonacci extension level pointing at these previous structural lows, and that also completes the bullish shark pattern at the golden Fibonacci level. But you can also search for other confluence or other elements for the pair, and we can see the 38% Fibonacci retracement level, and this is a major retracement level from all these swing high, push it to the 38% Fibonacci level. We have been here already before. Okay, in May, in the 15 May, we have nailed the 38% Fibonacci retracement level. But just to point, we have another pressure element, the bullish shark pattern at the golden Fibonacci extension level, the completion point of the pattern, converging with the 38% Fibonacci level and the previous weekly fractal support level. So pay attention to this price zone that may also favor at least a bounce for the dollar versus the Canadian. Now we have the dollar versus the Norwegian krone, also approaching crucial support levels 10.49, 10.50, let's say. We have the daily fractal support right there after the formation of this internal bearish bat pattern, nailed with or reinforced basically with a new fractal resistance at 10.71. New higher highs, just a few points above the fractal, and then the price pushed lower. So we are now approaching these fractal support levels, but most important, we are also approaching the structure support of this consolidation period. Don't get surprised, because the probability of a move to the downside is at least higher than the one to a move to the upside. Okay, so this pattern suggests a move in the direction of the previous swing, which was bearish. Moving forward, also another one that I shared with you, the Mexican peso, the golden Fibonacci 1855, reinforced at that time at 1859 with a new fractal resistance. I pointed this weekly fractal from October, as we can see it's still there, and we saw another rejection of this fractal resistance later, and we start to see the price pulling back again. So basically we are seeing the golden Fibonacci retracement level as element of resistance, and one of the patterns that I suggested before was a symmetrical pattern. So that points to, let's say, to 1745, 1750. That's the default projection for the Mexican peso, considering a symmetrical pattern. That pattern, of course, will point to the 50%, as you can see, the 50% retracement level from all this swing to the upside. That points to 1762. Another one very interesting, the euro versus the pound. We saw this previous structure support level acting as resistance. We saw a reinforcement of these levels with a new fractal at 84.95, new fractal resistance formed there, and the formation of the bearish shark pattern. As always, it suggests a retracement towards the 50% Fibonacci level. Now, why it's important now that the price is already moving, it's already approaching the default target zone, why I'm sharing this pattern with you, because all this sequence may complete a bullish 5-0 sequence. Okay, so we have, I need to clarify this for you again. Let me delete these lines here. So we saw a false breakout of the support, confirmed with a violation of this previous resistance. So we have this previous resistance level, and once the price breaks above it, we confirm this false breakout of the support below. Once that happens, we always project the golden Fibonacci level, because usually the price will search for that Fibonacci reversal extension level, golden Fibonacci level 184.96. That sequence completes a bearish shark pattern. But if the price then reacts to this pattern, to the 50% Fibonacci level, all that sequence will complete also a bullish 5-0 sequence. So which means we are now approaching the 50% Fibonacci, the default target for the shark, which is also the completion point for the bullish 5-0 sequence. We should not be surprised to see the price stalling above this price zone for a period of time, or even a bounce in the direction of the previous highs and previous resistance levels, okay, or a retest of these levels again. So pay attention to this level, and another reason why it's important to pay attention to this level is because if for some reason you are shorting this market, at this point I advise you to start partitioning your trade, move your stops to break even, start to take some actions regarding your risk strategy. So pay attention to these levels also for the euro versus the pound. Another one that should trade a few points lower, and I still expect that to happen, euro versus the New Zealand, far from the 38% Fibonacci retracement level, which is a default target. Not far, but we are not there yet. From the 38% Fibonacci retracement level, which is a default target for this bearish alt-bat pattern. 176 is a default target, which basically points to the previous fractal resistance level. We are a few points above these levels. Another one, the pound versus the New Zealand, completed the bearish shark pattern at the golden Fibonacci level. The same may happen here. We expect, or I expect, a move towards the 50% Fibonacci retracement level to 0755. At the same time, if that happens, we should also pay attention to the 5-0 sequence as always. Let's jump on gold. We have a few levels that I think you should pay attention to. First of all, we have the inverted edge and shoulders pattern formation, daily fractal resistance broken at 2339, and that triggers a move, or should trigger a move towards the 200% Fibonacci extension level, 2375, a few points above the recent highs. We are trading at 2365, so we have a few points above until we achieve the default targets for these inverted edge and shoulders pattern formation. Most important, the 2387 level, which converges with the 61.8% Fibonacci retracement level, as you can see the previous highs from June. If the price recovers above these levels, I admit a retest, or let's say I admit that will favor more upside momentum on gold, and a retest of the weekly fractal will not be a surprise at all. Let me also measure just to confirm this previous structure. Exactly, we have this extension level nailing the previous resistance level. So that being said, if gold pushes to the previous structure highs again, we will talk about a potential bearish crab pattern projected at the weekly fractal resistance 2450, previous structure highs from May, and that's what it is. We have a bearish, we are far away from that pattern, of course, but we have a bearish shark pattern, or a bearish crab pattern projected at the previous highs on gold. So pay attention to this 2387 level. As I said, that converges with this golden Fibonacci retracement level. If for some reason gold finds a motive or not only a motivation but a strength to break above this resistance, not only should provide you a nice opportunity to drive the market until and the retest of this major resistance, but we can also anticipate the formation of a bearish pattern once the price approaches the previous highs. This is gold on a 4 hours time frame chart. The same may happen on silver, different pattern. We will talk about that pattern in a while, but for now just pointing the fractal resistance levels. $30.84 major resistance on silver. Of course we have an intraday resistance at 29.65 already broken, and major support at 28.64. We have a new low at 28.65 or 56. Major extension level, as you can see, golden Fibonacci extension 32.25. This is an extension of the last swing low. As you can see, we have a new lower low below the previous structure support level. We may consider that a false break of support, and for that false break of support to validate or to be confirmed, we need to see a breakout of this major resistance level. If that happens, that should trigger a move towards the golden Fibonacci extension level, and that also completes a bearish shark pattern at the golden Fibonacci after the false break of support. Also pointing to the previous weekly fractal resistance 32.25 on silver. Now we have a range for crude oil already established between the 78.6% Fibonacci retracement level, 84.64, and we have already a new low, basically $82.66, back to previous resistance level. We are retesting the previous structure highs right there, previous fractal resistance on crude. This is a crucial level to hold. If crude recovers below these levels, we should see a progressive move towards the previous resistance level, previous weekly fractal resistance right here. That points to the previous daily fractal support level, $80.53. Of course, we will track that possibility, but just in case that happens in a very fast move without allowing us to update this chart, one of the patterns that may start to emerge on crude is an head and shoulders pattern formation. If for some reason the price reinforces this level again, and if starts to bounce, we may see this as a potential head and shoulders pattern later. For now, we have a very well established range to consider. This yellow box that you can see here between 84.64 and the previous resistance $83 for crude oil. This is just pure speculation, but just to consider, just something to consider if for some reason crude oil prints a very fast swing to the downside. Now let's finish with the Bund market, and one of the reasons why I'm saying that is because I want to show you the reaction to these specific harmonic patterns, and this is one of the best examples to show you the butterfly pattern at 127% Fibonacci extension level. What defines this pattern is the 78.6% Fibonacci retracement at this point. So we need to see the formation of this 78.6% Fibonacci level and then a new low, and once the price pulls back to the golden to the 127% Fibonacci extension of the first swing low, that completes the pattern. Okay, this is the bearish butterfly pattern completed at 127% Fibonacci extension level 132.94. Default targets for that pattern, the 38% Fibonacci level, as you can see, already achieved at 131.46. We had a golden Fibonacci extension projected right there that I thought it should be used as element of support, not even close. The price ignored the previous structure resistance, which is not usual, by the way. We have a very small and shy pressure period of time right there, but then the price pulls back immediately and back where? To the golden Fibonacci retracement level, 61.8% Fibonacci level, acting as element of support. We are now tracking, of course, a period of consolidation, and eventually that range will be established between the recent lows 130.18 and probably the 38% Fibonacci retracement. Of course, we are saying probably because this is a no trade setup. This is the setup was or the bullish shark pattern, as we can see on green, or the bearish butterfly pattern completed at 134.94. Those are the patterns that you should trade. At this point, we are forming a range, which I admit it may be formed between the Fibonacci extension level, retracement levels, and the recent lows. But only time will say, well, how the market will unfold from here. But just to point how those harmonic patterns or those advanced pattern formations tends to react, and how can we try to take advantage of these patterns. But for today, that's all, and this finishes my insights for now. And I will update some of these patterns later, of course, and stay tuned on those updates. Subscribe the channel, press that bell option in order to get the notification once I publish a new content. I hope you enjoy, and I hope to see you in the next video. See you there. Have a nice week.